The Nasdaq just closed lower for the fourth day in a row. Chip stocks got hit again, and the most powerful AI company on the planet just admitted, quietly, that it cannot go public at its own asking price. None of that is a coincidence, and if you think today was just a down day, you missed the real story. I'm Nicholas Thomas. This is TrendyVest. Let's get into it. First, the scoreboard. S&P 500 down 0.75%. Nasdaq down 1.25. Dow down 0.4. And here's the one that matters. The Russell 2000, the small cap index with basically zero AI exposure, up almost 0.75%. That tells you everything. For the week, the Nasdaq is down 4%. The Dow is UP 0.6. The rotation out of tech and into everything else is not a blip, it is a trend, and it accelerated this week. Let's start with the story nobody is treating seriously enough. OpenAI, the company behind ChatGPT, cannot go public at the price it wants. The New York Times reported that OpenAI's advisors gave Sam Altman two options: wait until 2027 for a $1 trillion valuation, or list sooner for less. Altman said no to the lower value. It's a non-starter. But here's the real story. OpenAI's CFO is pushing for a delay because the company has $600 billion in compute infrastructure commitments through 2030, $600 billion. And JP Morgan's trading desk put it plainly. The delay raises serious concerns about the sustainability of AI infrastructure spending. Wall Street's most powerful bank is telling you, we don't know who pays for all of this. Now for the most confusing moment. Wednesday night, Micron Technology reported the greatest quarter in semiconductor history. Revenue of $41.46 billion, earnings of $25.11 a share. The stock surged 17% Thursday and then Friday. Micron was down 4%, SanDisk down 5%. Lam Research and Western Digital falling as much as 10%. Why did a record quarter lead to a sell-off? Because expensive memory means higher costs for every single company building tech. Apple and Microsoft both raised prices this week, blaming memory costs. The chip winners are attacks on the supply chain. Here's the one that got no coverage. This morning, South Korea's Kospi index plunged more than 8%. It triggered a circuit breaker. Trading was halted for 20 minutes. Today's chip sell-off started in Seoul. Why? Because Samsung and SK Hynix make up more than half the Kospi's total market value. When Seoul needs an emergency brake, you are watching the global semiconductor trade in real distress. Here's a story almost nobody talked about. Tonight, FTSE Russell formally added SpaceX to the Russell 1000 index. The changes go live Monday morning. Watch SpaceX at the open. Trillions of dollars track this index. Fund managers have to buy SpaceX, not because they chose to, because the index says so. Estimates for the forced passive buying range as high as $27 billion. That demand is non-discretionary. Two more things. Minneapolis Fed President Neil Kashkari now expects one rate hike this year. Meanwhile, consumer sentiment is up and inflation expectations fell sharply to 3.3%. And oil. Iran launched drones at a cargo ship in the Strait of Hormuz today. Trump called it a foolish violation. And WTI crude fell 4% anyway. The market thinks the ceasefire holds, but this complacency is dangerous. Here's the bottom line. The AI trade hasn't collapsed, but it has fractured. The infrastructure layer is winning. But the application layer is being questioned harder than at any point in this cycle. Capital markets need answers. The rotation is real. Small caps are outperforming. Old economy stocks are holding up. The breadth is healthy. But the Nasdaq has a reckoning coming, and this week was just the opening argument. I'm Nicholas Thomas. That's your market recap for June 26th. Subscribe and read the full analysis at trendyvest.com. See you Monday, not financial advice.